Today, when you look around, you see that we're really going through a transformation. You may have heard the term knowledge economy as being kicked around. Well, more and more it's because there's a recognition about the fact that it's knowledge that is the driver of innovation and creation, and it's intellectual property that is being created as a result of that knowledge, and it's that intellectual property that has become an enormous value driver and has created enormous value amongst companies, and in many cases it's a value that is just now being recognized. And we can move on to the next slide. So let me give you just a quick introduction about myself. I got started in the licensing business like anybody else by complete accident. I had no clue what was going on. At that time, I got my start in the movie studios at Warner Brothers. And Warner Brothers had brought me on board at the time, and they had a movie called Batman. And they had no clue what to do with it. In fact, they didn't even have a licensing division. They had a licensing company called LCA, which they moved out from New York. Now, at this time, not even Major League Baseball was doing anything with its own merchandise. It was run by LCA, as was the Hockey League. Nobody was paying attention to intellectual property. And when I joined them, basically they had one mandate. They had a movie that they had decided to ship off to England to shoot because they didn't think anybody wanted to see it. It was a comic book called Batman. So when I got to the studio, they said to me, basically, here's a phone, go out and see if you can find somebody who's going to pay us money, because we told the producers we're going to make some money with this movie. No major retailer or manufacturer in the United States at that time wanted anything to do with the movie. They'd just come off a decade of Superman. And they had 4 or 5 Superman movies, and at that point, they had enough. They said nobody was interested. When I started in the business, there was no training. This whole idea of licensing intellectual property was nothing more than an afterthought. If you look at what happened with Lucas and Star Wars, he made a gazillion dollars because 20th Century Fox decided that the merchandise rights weren't worth anything. And if you were around in the 80s and early 90s, most of the licenses that were being issued by studios were done by some assistant in the marketing office because they just weren't paying attention. At any rate, you fast forward, and what happened, of course, there's been an explosion. So I had an opportunity to work at Warner Bros. At the time of Batman. From there, I went to Saban Entertainment, where they had the next big kids franchise called Mighty Morphin Power Rangers. And that thing exploded into an even bigger phenomenon. And suddenly, they woke up and realized that there's big money in merchandise, big money in licensing. And so, as a result of that start, I founded my own company, Licensing Consulting Group, to get on the other side of the desk, work with manufacturers who are looking to monetize their IP, as well as to acquire intellectual property, and along the way have worked with a variety of companies in consumer products, technologies, new inventors, as well as companies that are looking to acquire, and also wound up writing a couple of articles on intellectual property for various publications. So, we can move on to the next slide. So one of the things that I thought about in today's topic is to really look at what intellectual property is. And what it is it is a asset that, when combined with management and the proper way of monetizing, making money with it, increases shareholder value. And I thought about, when Patrick asked me to speak here, what is the subject as far as intellectual property and how that impacts on what is going on, especially with companies, the value and shareholder value. So the first thing to note is that Wall Street has finally woken up to the value of intellectual property. And the reason is because it's become a very large market. In fact, the market of intellectual property is so big, nobody really knows just how big it is, but all we do know is this is growing. Just look around at countries around the world. Suddenly, countries that 10 and 15 years ago were not doing anything with their intellectual property laws have suddenly come on strong. When you look at countries like China, India, Central and South America, I remember when I was in the studio, we used to do deals down in South America. We never did it direct with any of the manufacturers down there. We always had to find some big distributor who was going to go and police, because you never knew what happened to that IP when it went down there. And the same thing held true for China. Because a lot of people were always terrified about going over there to manufacture, because as soon as you set up shop, it spread like wildfire, because they didn't respect intellectual property law. Well, fast forward now to the 21st century, and suddenly China, India, Central and South America, everybody is on board. Just look at the negotiations going on with all these countries, the TRIPS, the PAC-10 or whatever, not the PAC-10, but the PAC-RIM. We've got a lot of high-level negotiations going on, and suddenly intellectual property is at the forefront. Suddenly they're looking at the standardization of law, the harmonization of the laws, because people, governments, businesses around the world have recognized the value. And as a result, one of the recognitions has been the discovery that inside companies today, especially public companies, but private companies, one of the biggest assets is intellectual property. And it's always been overlooked. It's always been thought of as an afterthought. We've got the IP, let's patent it, put it up on the shelf, and let it sit there. It just means that we've got the rights to do this. But what wasn't being recognized is it was actually the value creator, the value driver. And so as a result of that, investors now have started to recognize companies with IP as being very valuable. If you go to the next slide. So what has happened is, as I said, the size of the IP market is huge. According to the USPTO, it's been estimated at $5 trillion in the United States. But nobody really knows the extent of it. A lot of this information comes from public company data in terms of what they have listed in patents. It's an estimate of the value. It's probably, I surmise to you that it's probably much, much larger given the amount of private companies, startups that have a lot of technology that haven't been applied to. In terms of what is being done with this intellectual property, this $5 trillion, according to Deloitte & Touche, it's about 2 years ago, their estimate is that about $500 billion in licensing revenues are being generated off of this intellectual property. And again, nobody knows for sure because of the private transactions, and you say these numbers are enormous, and they're expecting them to get larger as the recognition of intellectual property continues. As I said, one of the recognitions is the fact that intellectual property has become one of the biggest assets of public companies. And what you see here there is an estimate of what the value, the asset value of public companies are. And back in the 1970s, nobody was recognizing intellectual property as any kind of quote-unquote asset. Most of the thought about assets was physical, plant, equipment, products, inventory. Well, that's changed and evolved, and at one point where tangible assets represented the lion's share, over 80% of what was the asset value of a company, today tangible assets represent less than 20%, and suddenly 80% are these intangible assets made up a big part of intellectual property. But you also hear about intellectual capital as part of that, knowledge workers and things like that. And so suddenly when this recognition about intellectual property and what the real assets of companies are, it has created a dramatic shift in terms of what's going on. So what's happened is a lot of investors have suddenly seen and woke up to the value of what intellectual property is creating. And there's a lot of companies out there that now have taken their intellectual property and realize that there's more money to be made in commercializing the intellectual property than actually going out and doing something with it. And there's been a couple of big companies that have made headlines: Nokia, $653 million, AOL, which was really going down the tube, suddenly took their portfolio and went and licensed it out and did $96 million last year. These are just two of many. But what you're discovering is these companies looked back in at what they had and realized that there is an asset that's completely underplayed, and there's a lot of value. In fact, today, when you look around, you can't help but hear on the news, if you read the Wall Street Journal or any financial publication, there's always something about intellectual property today. It's either somebody that's doing a licensing deal, most of the time it's about litigation and people fighting about it, but even that is indicative of what's going on, not to mention all the news that's coming out in countries around the world, especially China and India, who are coming up very aggressively. You read about a lot of these big companies, especially pharmaceutical companies, which are some of the heaviest when it comes to patents and intellectual property and all the challenges they're facing going into countries such as China and India and the enforcement of their rights. Suddenly this is taking the forefront to companies in terms of what they realize that they can create in terms of value. So when you look at intellectual property and you see what kind of impact does intellectual property have on shareholder value, and what you actually find is it has significant value. Ocean Tomo is a company that's been very active in the brokering and auctioning of IP portfolios. They put together what they call the 300 Patent Index. And basically this is an index of companies that are IP rich and have been tracking them versus the S&P in terms of the value that these companies are creating. And what they're finding is that they're outperforming the S&P. They also track this against the Russell. And the composition of it is between large, mid, and small cap companies, 25, 40, 35, very heavy with information technology and medical devices. But what this is showing is that companies that have a proactive licensing program, meaning that they're going out and they're doing something with their intellectual property, they're monetizing, they're doing licensing deals, and they're generating capital, and they're also protecting their IP through aggressive legal protection. Oftentimes, what happens is a lot of this IP is created, but there's an afterthought in terms of what to do, how to protect it, what rights to secure, even keeping information proprietary and confidential. And you hear a lot about companies that suddenly lose a lot of intellectual property. That's because they're not taking aggressive legal protection. And finally, what a lot of this shareholder value is being driven by is that when you monetize intellectual property, when you use the licensing model, you're talking about a low-cost, high-return model. Because what you're doing is you're going out and through licensing, which is pretty much just a labor-intensive, meeting with companies, doing a deal, signing the contract, letting them monetize it, and just monitoring the contract. So the return, these are returns that are coming right to the bottom line. There isn't a lot of heavy equipment, machinery, manufacturing, tooling, raw materials involved in this. It's suddenly bringing a high cash value to the bottom line of these companies, and as a result, they're seeing increased shareholder value. And as a result of this, what is being created, or what is emerging now, is on Wall Street, which they always love to have their acronyms, is PIPCOs. Okay, PIPCOs, public intellectual property companies. And what these are basically are companies that have a lot of IP, and rather than letting it sit and focus on just manufacturing products or services around it, what they're going out and they're using a licensing, a monetization model to make money. This is how they're building them. And what they do is they focus on extracting the value of IP, because what happens is for a lot of companies, if you're manufacturing a certain product or service, oftentimes there could be far more value in that intellectual property than just looking at it as a barrier to keep others out. Oftentimes there's an application to other markets, other systems. And you're finding this a lot in companies that have suddenly woken up and seen not only what they have in the form of patents and technology, but what else they have in the form of know-how and brands and trade secrets. And suddenly they're recognizing that this can be bundled up and licensed out and bring in significant dollars to the bottom line. You could look at companies like IBM, who does over $1 billion a year in licensing alone. Okay, there's Hewlett-Packard, Procter & Gamble, Procter & Gamble's one company. They now bundle up all of their IP. The moment that they develop the IP, take it out to market, it's licensed out within a year. They take their manufacturing technology, their marketing, pricing, customer research, they bundle it up. They license it out for others to use, because these companies have recognized there's far more value in those assets than just keeping them proprietary. And these are companies where if it was just 20 years ago, the whole thing about all of this IP was what? Let's keep it secret. We don't want anybody to get their hands on it. This is what gives us the value. And now we've reached a point where they realize it's just the opposite. I've got it, you've got it. Now I get paid when I make it, and I get paid when you make it. That's basically what has happened. So on the next slide, what you see here are the evolving business models that exist. Now, today you find that most companies are playing down here, called practicing entities. And these are NPEs, non-practicing entities, practicing entities. You may have heard some of these terms pop up in the news. But what's happening is a lot of companies have been focused down here, where basically you've got your proprietary product, service, technology, and you're making and selling it. And that's where the value's been created, the revenues. But now what's evolving is this model that's saying, look, we can make a lot more money if we fully monetize our assets. So what you've got now is you've got the creation of what's called hybrids and NPEs. The hybrids are companies, as I mentioned a couple of them at the top, such as Qualcomm and InterDigital, where they get anywhere from 30 to 40% of their revenues now by monetizing their technology instead of making it. Okay? And you go down the list, in the middle you've got Mossad and Rambus and a number of the others, but what is existing now in the form of these hybrids is a lot of the companies that are public are falling under this 500 million and below. They're the smaller companies that are realizing that by monetizing their assets, they can get a far better return. And if at the top of the chain, you've got these NPEs, non-practicing entities. You may have also heard this term referred to with the patent trolls, okay, which is an issue. And you've got really kind of two schools of the NPEs. You've got one, if you go back for just a minute, you've got one which really looks at taking all of this technology from a lot of companies, especially smaller businesses, and going out and getting it monetized for them and doing all the heavy lifting that's going to be taken to have to protect it and monetize it. And then on the other side, you've got another group, if you will, and this is the one that you hear the news about, called the patent trolls. And they're the ones that are going out there scooping up all of these patents, good, bad, ugly, it doesn't matter, and they're filing litigation against all these companies that are crossing over in any way, shape, or form. And the whole point of that is basically to extract settlements from them. Okay? Because in many cases, they're going after them for 50, 100, 200,000. It's not worth litigating. It's just not worth litigating. It's becoming a big issue because now it's even gone up to the level, and Obama's talked about implementing some kind of regulation to try to stop this. But really, what it's created from is a gap in the market because there's so much intellectual property and not enough companies commercializing it that you're given an opportunity for patent trolls to go in there and scoop up all these patents that are just sitting there. And for a lot of small companies and inventors, they just don't know how to commercialize it. And then on the other side, of course, you have a few companies that look to work with businesses to commercialize it with other companies out there that basically have the wheels rolling. What I like to say is that I have companies that approach me, they have intellectual property, and they think it's the greatest thing since sliced bread. And they're going to create a new wheel that's going to roll better than the wheel that's rolling out there. And what I say to them, I said, it's very hard to reinvent a new wheel today. Typically, all the wheels that are rolling are the big wheels, and those are the ones that you get on board unless you're going to have a super breakthrough technology like the next Windows operating platform or something like that. And the point being is that oftentimes a lot of inventors will come at it saying, I'm going to create a business, and I'm going to build this business, and I'm going to make all this money. Yet, for all of you in this room who are out there running businesses, building businesses, you know, raising capital, managing a business, operating a business can be very expensive, and it can also be very risky. And one of the worst things is to wind up undercapitalized, out of money, and out of steam, because then you're stopped in the market. And that's what happens oftentimes at the very small level. And what I often talk to companies about is, why don't you go out and let others monetize it for you? Others that have the resources, the manpower, the know-how, and the expertise and the legal muscle, okay? Because a big part of today is the litigation. When you read in the papers today about what's going on in the patent troll markets, we were just talking earlier about Samsung and Apple and Nokia, and all these guys are beating themselves up out there. You read about these lawsuits all the time in Apple. We're talking hundreds of millions of dollars. So you can imagine what it costs to have to litigate today. I think the average cost for litigation of patents today is about $1 million. And that doesn't even mean you're going to return that. So it's a very expensive market. And the question is, how can you really leverage up on that? And certainly for a lot of the smaller companies, looking at these hybrid models is really the way to go. Because for a lot of companies, using the strategies of licensing gives them a chance to partner and leverage up on their partners' resources, especially when it comes to the legal side of the equation. So if we go to the next slide. So there are a number of key issues and challenges for companies today as it relates to intellectual property. Probably one of the first ones is building an IP-centric organization. What does that mean? What that means is a company that is not looking at themselves as operating physical plant and equipment, okay, is not operating with tangible goods, but saying we've got a core asset of intellectual property. And what we need to focus on is how do we monetize, how do we maximize that IP? Because IP, unlike a tangible product, can be very fluid and have other applications. And oftentimes, it's stepping outside and thinking about it. You hear stories all the time about the inventions, the formulations that are invented for one reason, and they're used for something else. They created, you know, like Viagra for one reason, but then they discovered it was for something else, things like that. Well, that's something that is occurring today, and one of the things about an IP-centric organization, as I was talking about looking at it, is they understand that we can take our intellectual property and we can do more with it by focusing our energies on finding ways to monetize it. But part of that challenge is also the fact of understanding IP today is more than patents, trademarks, and copyrights. That's typically what most people think about, is the patents, trademarks, and copyright. Yet today, That's what's called the registered side of intellectual property. You can register those. Yet today there exists a huge market in what's called unregistered intellectual property. Trade secrets, know-how, business processes. You see a lot of legal battles being fought on the business process front on the internet, especially between Amazon and a lot of companies that are developing these processes, and Google trying to scoop it up. And that's an issue for a lot of companies, is understanding that their IP extends beyond just the fact that they've got a registered IP. It extends on all the know-how that they created around that. If it's a technology in a manufacturing process, what does it take to manufacture and deliver that product? There is a lot of know-how that was created to make it happen. What works? What doesn't work? How do we test this so we get the reliability we want? And so what's happened is that know-how becomes a valuable part of the IP, and that's something that has to be captured as part of that value. That's why I go back to the Procter & Gamble example. They went in and they realized they had a lot of expertise when it came to manufacturing, marketing, and they were able to bundle this up, form companies, and license it out to others to use. That's the same model that companies should be looking at, is what do we look at in terms of our IP beyond just our registered IP. The next issue out there, and it's a challenging one, is how do you value IP? And there's been change in the regulations, the SOX regulations, and part of that now is the identification of IP and what's that IP worth. Okay, and that's not an easy question to answer, yet it's become identified as an asset of the company, and it requires valuation, and it's very challenging. Now there's some guidelines that are out there. I'm not an accountant, so I can't get into all the details behind it. But it does become a challenging issue because suddenly the recognition is that IP is a significant asset of the company, yet it's not reflected in the value of the balance sheets. Where do you stand with meeting the regulations for reporting? It's an interesting challenge, and it's one that a lot of companies are tackling with. In fact, today I had a conversation with an IP valuation firm. They get no less than 20 calls a week now from companies with IP technology trying to get a valuation for tax purposes, financing, collateral, because it is a big issue. And in fact, I'll go back to two more slides. I just want to cover the last point. One more. And then, of course, the last point in terms of the challenges is litigation. You're reading about litigation. It's happening more and more. A lot of it is happening, as I said, because of the patent trolls, the issues with IP law. IP law is very fluid. It never seems to stay still. There's always something new coming out, and litigation is a big part of it. There's a lot of things that are coming up as a result of this litigation. IP insurance has been around, but not many people know about intellectual property insurance. Many companies that I work with don't even know that you can get your intellectual property insured for infringement, legal costs, loss of revenues, and everything like that. There are tools out there that are being identified, but litigation is an issue, and it's something now more than anything else, especially for companies with patents into technologies, have to start looking at the litigation risks that accompany the commercialization of their IP. So moving forward then, when you look at the return on investment in intellectual property, when you look on increasing value, it then becomes a model where you have many facets of the IP that can be monetized. Obviously, producing and selling the products is one, but it's one of several. There's the licensing out and cross-licensing. Licensing out meaning giving others the rights to use your intellectual property to make and sell. The cross-licensing is where we're sharing our technology. You'll see this a lot between the Samsungs and the Nokias and everything. They basically cross-license each other. And it offsets the royalties so that they can use their technology. They can't make those cell phones without each other's technologies. They can't deliver that software. Cross-licensing is usually where a lot of these deals wind up when you see these litigations that go on between these big companies. They wind up coming up with a settlement. They put these agreements together. So this is another area that is a way to leverage IP. And then, of course, infringement enforcement. There's a lot of money that's left on the table because companies fail to enforce their rights. Okay, they think it's too expensive or whatever the case. But nonetheless, that infringement is important. One, to protect them, but two, there's revenue to be found. Financing for IP is an area, as I said, Wall Street is getting very interested in. Securitization, royalty financing, debt collateral, all of these areas are now coming up very quickly around intellectual property. The big challenge for them, nobody really understands this intellectual property market and what it means. What is the value of that IP? What are the risks inherent? And there's new models that are coming to the market now, today, to try to take advantage of this. I have had conversations with investment firms that have contacted people that are looking for deals for royalty financing. They have these big pension funds, insurance companies. They're looking for a place to park their money to get continuous returns over 5 or 10 years, because these licensing deals, they come out and they pay the royalties on a quarterly basis, and they're looking for the AA or AAA rated licensees who have a good debt rating that basically offer a good investment risk. So this is an area that is coming up very strong. A lot of companies looking at it, a lot of people on Wall Street looking at it, but a lot of bankers who still need a lot of education on exactly what IP is and how it works. And of course, on the competitive advantage, something that's often thought about first, well, if I have something nobody else can have, it's going to give me a competitive advantage. But it goes beyond that. Oftentimes, the competitive advantage can be found by licensing your technology out to non-competing companies or to companies, industries around you that actually isolate and give you a better competitive advantage. For example, going back to Procter & Gamble, one of the competitive advantage strategies they use is they take their packaging technology and they license it to every one of their competitors for their laundry detergent, so that everybody uses the same size container in the supermarket. Why do they do that? The answer is because now they've leveled the playing field and they compete on the quality of their product. So now they go in and they don't have to worry about dealing with the supermarkets and everybody else trying to figure out these packaging configurations. They're figuring out a way to use their intellectual property to give them an even better competitive advantage. And then, of course, other potential applications. Probably one of the most underutilized or under-thought about things for intellectual property is how else can we use this? What other applications? And oftentimes, it takes an outside eye to be able to look in and say, have you thought about this? Have you thought about that? So again, many ways to monetize intellectual property, many ways to license intellectual property to bring in greater returns. And so, in wrapping up this presentation, I think that one of the things, as I said earlier on, is really about monetizing IP and maximizing shareholder value. And how you do that is by looking at IP as the core asset of the company. It requires having IP expertise. Now, I operate as a consultant, advisor. I work with companies looking at their IP from the standpoint of what can you do with this IP? What expertise is needed to make money with the IP? Oftentimes, intellectual property is thought of as a legal thing. I talk to people all the time. They say, oh, well, don't you have to be a lawyer to do something with IP? Well, yes, you do. There are certain legal things, but when you talk about commercializing or monetizing IP, the licensing process is about making money. How can we go out and leverage this up to make money with it? And that's really the kind of expertise that's needed. And then pairing that with effective management. Oftentimes, within companies and organizations, nobody's really giving thought to the IP other than we have a product or a service and we've got a copyright on it. But they're not really thinking about how can we manage this to make more money. That's an important part of it. And then, of course, figuring out all the parts, as I said earlier on. What are all the parts behind the intellectual property? Because there are many parts. There are new parts, there are moving parts, there are evolving parts, brands, trademarks, copyrights, and patents are just the registered side. The unregistered side is all the know-how, all the trade secrets that exist out there. I mean, Coca-Cola's had a formula that nobody knows about. They've had it out there for 50 years. And it's protected under a brand, but they've never registered that trade secret. Okay, it's not registered anywhere. If it was, you'd all know about it. We'd all be making our own Coca-Cola. But that's the point being is that there are now tools and ways of managing your IP that includes those trade secrets and know-hows in which you can monetize that. And finally, by putting this all together, by looking at IP as a core asset, having the effective management and the expertise needed, what you can do is generate increased returns and shareholder value has been demonstrated here, because intellectual property in itself, when you maximize value, leverage value, again, you're talking about a low cost to leverage it up with high returns, high net margins, which come right to the bottom line. So I'd like to thank you for your time. I hope you enjoyed the presentation. I'll be happy to answer any questions if you go to the next slide. Here's my contact information, and I also have a newsletter I put out every month on basically how to leverage your intellectual property. If you'd like to get a copy of it, just go to my website, sign up. It comes out every month. And that's it. Thank you very much, ladies.
So that last part, having a trade secret, then how could you monetize a trade secret without Can you talk about that a little bit?
Yeah, it's a good question, because trade secrets are basically kept under wraps. You know, it's proprietary information documentation, and so the way it's captured is under license agreements, confidentiality agreements, and keeping that information proprietary, making sure your employees don't walk off with it, making sure that you've got ironclad work for hire agreements, things like that. That's how you protect that. And then, of course, the formulation of it, oftentimes you'll find companies that have a trade secret such as a formulation. You don't give it all to one formula. They use 2 or 3 formulators, bring it to a third party who makes it. So it's a different way of managing that intellectual property, but you can, leverage those trade secrets, which many companies do. When you look at the bottlers, all the bottlers for all the different beverage companies and things like that, all the perfume manufacturers, all the energy drink manufacturers, those are all trade secrets. Nobody's telling you what's inside that. And what they're doing is they're bundling it up, and if they're not if they are licensing out, they're putting it under license agreements to keep all that information proprietary and under wraps.
So when we started our company, we saw that there's a lot of university academic centers that are doing research, and the academicians are keen to develop something, publish a paper on it,
Right.
and then it lies fallow.
Right.
And so one of the ways that we went to look at things was to seek that out rather than spending